we realize that service tax is the tax of today. Am I correct? And having said that, it is very, very important that we have a specialized knowledge as far as this particular subject is concerned. In fact, in the morning, I read a quote that in today's time, a person who cannot read and write will not be termed as an illiterate. A person who cannot unlearn what he has learned and relearn will be known as an illiterate. So that is very true for service tax. Why? Because A, the law is changing very fast. See, Central Excise is a law of which year? 1944. You have a dedicated Central Excise Act for it. Customs is a law of 1962. Income tax, I'm shifting focus to the direct taxes. Income tax is a law of 1961. Likewise, VAT, which is a part of indirect tax structure, it was only as recent as 2005. Likewise, we see, and you see all these particular laws have a dedicated act towards them. It is only service tax which was introduced in 1994, and they said by the time service tax law attained adulthood, it was married to someone. You know, that was the popular anecdote that they used. Why? Because service tax, I'm sure all of you or a lot of you must be aware, underwent a massive restructuring in the year 2012 with effect from 1st of July. And that was primarily done with a view to aligning the service tax laws with the impending goods and service tax. So the point is that this law is changing very, very rampantly. I am sure you are aware of the website that is dedicated. I do not know what you all refer to as far as income tax laws are concerned, but as far as service tax is concerned, the website is www.cbec.gov.in. CBEC, they say, is the Central Board of, yeah, to my knowledge, we often call it Central Board of Eternal Confusion. Because of the way the laws are changing, well, it's not in their hands, but that is one. And now, as we all know, because of the automation in service tax in terms of filing returns, e-payment, etc., the dedicated website is www.aces.gov.in. Unlike before, where service tax was not mandatorily required to be paid via your e-banking facilities, now I hope you all are aware that even if it is 1 rupee, you need to pay it online. And the due date for the same is, in case of proprietorship or others, a proprietorship, it will be 6th of the month following the quarter, and otherwise it will be the 6th of the following month. So now this is, well, what is service tax? We have to talk about that. And before I move focus to service tax, I would like to steal a few moments on the goods and service tax. Now, when our chairman requested me to think about a topic to speak on, honestly speaking, we deliberate upon service tax all across the country and on various XYZ subjects. But now service tax is at a stage that if you really want to speak on service tax, it has to be on a particular subject. Say for example, works contract tax, or say for example, service tax on the construction industry, or say for example, service tax on food and beverage industry. But because the audience here is primarily from practice, dedicating an hour of deliberation to a particular subject may not be of interest to each one of us. So today our discussion will be basically around the general concepts of service tax and also the amendments that have taken place with effect from the 1st of April 2015, and also the massive shift of service tax with effect from 1st of July 2012. But before I move forward, I would like to definitely speak for a few minutes on the goods and service tax, because that is the tax that we are going to deal with, if not from 1st of April, should be from the 1st of October 2016, right? Now, as the name suggests, goods and service tax. Before I speak, I would like to get a general, feedback from the audience that I'm sure you must be reading it in the papers that the Lok Sabha has passed the 122nd constitutional amendment bill, that the finance minister and the current team under the aegis of Mr. Modi, is working very, very hard for the implementation of GST, right? Now, when we speak about GST, what really comes to your mind? What is the full form of GST? Goods and Service Tax. So as the name suggests, this will be a tax which is on goods and on services. Now, currently under the indirect tax regime, we have two forms of taxes. One, certain level of taxes which are existing under the state level, and certain taxes which are existing under the central level. Now when you talk about the state taxes, see, whenever we understand any taxation structure in a country, it's very important to understand how the constitution is drafted. In our country, basically under the 7th schedule to the constitution, there are 3 lists that exist. One is list 1, the second is list 2, and the third is list 3. List 1 lists down all the taxes where the sole prerogative of levy, administration and collection of the taxes lies with the central government. Likewise, the list 2 will take care of all the taxes that are lying within the prerogative of the state government. And list 3 is that list where probably both of them have concurrent powers in terms of collection, administration and levy, example the stamp duty. Now when I talk about the state level taxes, VAT. VAT is a tax on goods. Even excise is a tax on goods. But what is the taxable event when you talk about value added tax?
The sale.
Sale. Okay. Now when you talk about other taxes at the state level, we have taxes like luxury tax, entertainment tax, purchase tax, entry tax, and lot of other multiple taxes that exist at the state level. Am I correct? At the central level, we have certain taxes, say for example, service tax. So service tax is a tax on services which is introduced under entry number 92C of the 7th schedule to the constitution under list 2. Likewise, you have a Central Excise Act which governs the levy of duty on manufacture. Though the taxable event is manufacture, it is paid at the time of removal from the factory. So that is again a tax on goods. Likewise, you have customs. So you have these various acts that are existing at the central level. And then you have certain other taxes which exist at the under list 3. Say for example the stamp duty. So, and what happens is that there is a wide discrepancy between the two elements of goods and services. And if you see that what is the primary area of focus here is that the taxable event for each tax is different. What is the taxable event under value added tax? Sale or trading. You have the definition of sale given under section 2 of the Value Added Tax Act. What is the taxable event under service tax? Rendition of service. And again, the point of taxation is guided by the point of taxation rules 2011. Likewise, central excise. What is the taxable event? Manufacturing. So you see across board for different types of taxes, the acts are different and the taxable event is different. Am I correct? Now, what was the exact intention of GST? The exact intention of GST, the ideal GST, which obviously we will not be having, which the finance minister also said that in a country like ours, which has got a federal structure, wherein the states have their own powers and the central has separate set of power, it is not possible to get in one single GST, right? So now what will we be having will be a dual GST, that is one GST at the state level and one GST at the central level. And the entire idea was initially that let's have one single GST, there will be one common act and there will be one taxable event, right? But is that possible in a country like ours? Yes or no? You have fierce reaction, especially from states like ours initially. Now definitely our state is very much on board as far as GST is concerned. But their idea was that no, we will lose our sovereignty A, and as you see the CST rate, the central sale tax, what is the current rate of CST against, say for example, F forms and C forms?
2%.
It's 2%, and initially it was much higher, right? So what happened is, and CST has a cascading effect, yes or no? Can you take the input credit of CST? No. So it's a cost to the purchaser. So what happens is they wanted to phase out the CST so that the entire chain of SENVAT credit is maintained. But on account of the phasing out of CST, now CST is a tax on what? Interstate sale guided under section 3A and 3B of the Central Sale Tax Act 1956, right? So, but it is a central tax, but the collection is given to the states. So once the CST phase out started, there was a huge chunk of revenue that was lost for the state, and our central governments, etc., thought of actually reimbursing the state for the losses, which was amounting to some 20,000 odd crores, but which was not done. So as a result of which, the state governments were very apprehensive that now if you introduce GST, again we will lose our sovereignty, again whatever collection that we get, we will lose out on that, so we will not allow you to get a single GST. So now what do you have will be a dual GST. In fact, Malaysia is as recent as 1st of April 2015 has implemented GST, and the rate is around 6%, and it's one of the last countries to implement GST. Let's see where do we stand. So now when you talk about the GST in India, so what do you think will be the taxable event? Now I have spoken a lot. First tell me, though our discussion is around service tax, can we spare 10 minutes on GST with the permission of the audience? Yes? Now, I have spoken a few lines about GST and I can speak a lot on GST. But before that, two things I need to ask you. A, what I am speaking, is it making any sense to all of you here? Yes? Now, what is your idea of GST? Anyone? I mean, no chorus, but yes, sir, please.
It is basically destination based instead of activity based.
Okay, so we will basically make a note of each point that is brought from the audience, and then we'll discuss. Well, this is one of the very important points, that this is a destination based tax.
And there are two GSTs.
Okay, so there are two GSTs.
Uniform rate. Uniform rate.
Uniform rate. Okay.
No, there will not be a uniform rate in state.
Let's note down the points, sir, and then probably we'll discuss these points in brief detail, so that I'm not, at the end of the day, see what happens is, prior to this the video recording was never done. So we used to catch the nerve of the audience and speak on whatever topic that we felt was more relevant, depending upon the hour, need of the hour. But now with this happening, and I am very, what should I say, active on speaking at forums. So once the Delhi office comes to know that from service tax I've spoken about GST, because in Durgapur now we have a full day session in GST happening very soon. So we'll not go into all these details in very, grave details, but we'll definitely touch upon each of these points, right? So yes, so we've got 3 points till now. It's a dual GST, it's a destination based tax. Uniform rate was 1 point. Any other thing? Anything from the audience, please?
Abolition of multiple taxes.
Sorry?
Abolition of multiple taxes.
Abolition of multiple taxes.
But state GSTs could vary between for each of the items. That's my point.
Okay. State GSTs would vary. What else, please, from this side of the audience? See, if I divide you into 2 teams, you know, I mean, I've had enough answers from this side. Now I need answers from that side. And as I said, this is a new law. Honestly speaking, I'm as naive on the subject as you are. Probably since my area of specialization is this, if I don't even know this much, I'll not be able to survive. That's the entire reason why I stand here and speak. Otherwise, when we talk about a topic like GST, you can be rest assured that this is just an ideation mode right now. Even for the government at the central level, things are still getting panned out. You very well know what happened to the recent scenario when the GST bill was passed in the Lok Sabha, that people from the opposition actually staged a walkout. But anyways, any other points, please? GST. What do you think will be the taxable event? See, in service we have rendition of service. Today as a chartered accountant, when I'm rendering services, I charge service tax subject to the conditions. Say for example, there is no small scale exemption I'm taking, but do I charge central excise on my bill? No. But if I am a trader and I am selling a commodity to you, will I charge VAT or service tax? VAT. So what will happen under the GST regime? What will happen to people like us who are in practice? Will we charge VAT? Will we start charging central excise? If not, then how and what will we charge on our bills? Any idea? So in other words, what will be the taxable event?
Sure.
Sorry?
Would be sure.
Sale. I have my doubts on that, but anyways. The second thing is, yes sir?
Value addition.
Value addition. Acha. Any other idea about the threshold exemption? What is the current threshold exemption as far as the West Bengal VAT is concerned? 10 lakhs. No, I think it was 5 and it's been recently revised.
Recently revised 10.
Yes. 10 lakhs is the amended one. Now, likewise in Assam value added tax, we see that the limit is 2 lakhs. What is the threshold exemption for service tax?
10 lakhs.
10 lakhs for collection and payment, 9 lakhs for registration. For Central Excise Act, what is the SSI exemption? 1.5. So again, under GST, how do we treat this? Today, I am a service provider and if my official receipts are below 10 lakh, I am not required to charge service tax. But what happens in the GST scenario? Are we targeting a broader base with a lower rate or are we targeting a narrow base with a high rate? See, this is inversely proportional to each other. The minute you broaden your tax base, say for example, you want to get in dealers who have also just 2 lakhs of turnover, then what happens? You keep a lower rate. On the other hand, if you have a high rate and you're making up your tax collections by virtue of imposing a higher rate of tax, then your base becomes narrower. And how does the base become narrower? By increasing your threshold exemption. So, what will be the threshold exemption? What will be the rate? Last I heard was the revenue neutral rate of 27%, which by any standard of measures is extremely high. I'm rounding it off to 27. That is what the last news we heard was the panel recommending the finance ministry to have a revenue neutral rate of around 27%. So this is what happens. So again, we are not very sure as to what will be the rate, right? Now, SINGHI credit. Now, tell me today if I am a service provider and I have paid certain VAT when I have purchased this book in bulk, right? And this is assuming official receipts, etc., etc. Am I today in a position to set off my input credit of VAT against my output of service tax?
No.
Yes or no? No. Am I allowed to set off the input credit of central excise duty against the output of service tax? Yes. Now see, if you ask me, the first tectonic shift as far as when you talk about the GST happened way back in 2004 by virtue of the amended SINGHI credit rules when the cross utilization between service tax and central excise was allowed and vice versa, prior to which it was not allowed. You could not set off central excise with service tax and vice versa. Now by virtue of rule 3, you exactly know what are the input services or what is the input or the central excise duty that you pay on your capital goods that can be set off against the output of either service tax or the output of central excise. So what happens with the introduction of GST? After the introduction of GST, will I be allowed to take a set off of my value added tax against my service tax? Yes or no?
Yes.
How many people? See, people who answer in yes, I know. People who answer in no, I understand no. But I really don't understand when people do not give me any answers. So, when I ask you questions, make sure you either answer in a yes or a no. And as I said, it's really okay that if we have wrong answers, in fact, that will increase the level of our discussion. If at all we get varied answers from the audience. So, my question again is, and most of you, honestly speaking, today I see young faces here who may be in practice or else working somewhere, but most of the audience that I address, your experience is more than my age. So at any given point in time, you will be anyways much more knowledgeable on the subject that I am. So only if we interact with each other, the benefit is that I will be more satiated at the end of the session that yes, there was a course of value addition more than anything else. And each one of you, once you leave the hall, you will be able to say that yes, this was something that is not done just for the CPRs. We had some value addition as far as the subject is concerned. So my question was that unlike today, where you are not allowed to set off your state taxes against your central levy, will I now be allowed, post the implementation of GST, to set off my, say for example, the state GST against the central GST? Yes or no?
Yes.
So SENVAT credit, how many people feel that yes, you will be allowed to set it off?
Yes.
Yes, and the others I assume saying that no, it will not be allowed to. Now see, basically our points will be A, it's a destination based tax, B, what will be the rate, whether the taxes will all be abolished and it will culminate into a single GST or a dual GST, what will be the taxable event, what will be the threshold, what will be the rate, and lastly what will be the basis on which the SENVAT credit will be allowed, right? Primarily these are the points, and there are a few other points which I'd like to touch upon as to what products are kept outside GST, what is the extra tax that the government is wanting to put in, what will be the GST council like, etc, etc. See, the idea of GST was first mooted by the Kelkar committee in 2004. And how many of you all have gone through the first discussion paper which was introduced in 2009 November, wherein it gave a very good idea about what the GST will be like in India. In fact, if you can, I'd still recommend that go and download that. It's called the FDP on GST, which was introduced, I think, 10th November or sometime in the month of November in 2009. Thereafter, there were various governments which have shown their preference for GST, but knowing the federal structure of our country, some point or other we see that the government used to, or the people in the opposition used to stage a walkout. But finally we see that the first 122nd constitutional amendment bill is basically was introduced in the Lok Sabha in the month of December 2014, and as recent as the 6th of May 2015, the Lok Sabha has passed, which is the lower house of the parliament. It has passed the 122nd Constitutional Amendment Bill. Now, two questions here. Why do we need a Constitutional Amendment Bill? One. And B, is it that now it has been passed in the Lok Sabha? What is the fate of the GST bill? So A, why is the CAB needed? The Constitutional Amendment Bill is needed. Why? Because the way the Constitution is drafted, the states do not have a power to collect taxes on services. Likewise, the Constitution does not give any power to the center to collect taxes on goods in the form of, say for example, value-added tax. So the basic premise of GST will be what? That the culmination of taxes at the central level and the culmination of taxes at the state level, wherein the proceeds from each one of this will be shared between the center and the states. And that is the reason why, and for various other reasons, that we need the Constitutional Amendment Bill. Now the second point is, what was the second point? Yes, that now that it has been passed in the Lok Sabha, it is now required to see the light of day in the Rajya Sabha. It needs to be ratified by 50% of the state assemblies. Then will it go to the president for the presidential assent, and then will the states get the right to draft their own respective acts, and the central GST law can be drafted and put forth. Now the target date initially, which was in the last budget, which was presented on the 28th of February, the finance minister mentioned GST around 8 times in his budget speech. So it showed a very strong conviction towards GST. In fact, when the rates of service tax were proposed to be increased, a lot of people went, this is not fair, this will lead to inflation and only the costs will rise, etc, etc. But this, I would say, was one right step towards GST. Why? Because as I said, the last we heard was the revenue neutral rate would be somewhere around 27%. That even the FM as recent as 10 days back has clarified will not be the rate, it will be something lower. Now Malaysia has a rate of 6%, Germany has a rate of 23%. So it depends, but the average rate of GST, if you see worldwide, will be 16 to 20%, and our countries will be one amongst the last countries to implement the law of GST.
One question here.
Yes, please.
Why is this GST rate is so high, like 25% or 20%?
See, that depends on country to country. Depends upon the fact that maybe the threshold limit is high. So then in that case, the rates are low. Like in Malaysia, they have kept the threshold limit somewhere close to 500,000. So what happens is...
calculation I'm asking. What is the basis
See,
of
in our country, I can let you know, but the rates have not been finalized. Revenue neutral rate in India, which was proposed, was around 26.8%. Rounded off to 27%. So they worked on some data which was given to them historically, say around 15 to 20 days back, a couple of years back. But now what has happened is that this rate is now changed, basis of which they are saying that the rate will be much lower. So they have the internal mechanism on the basis of which they actually work out the rates. It will, in my knowledge, should be around in between 16 to 20%. Now, yes, so as I said, that it will need to be ratified by the state assemblies, and it is only after that that this becomes a law in the country. Now coming to the fine points. A, it will be a dual GST. There is no second thought to that. You will have X number of taxes at the central level, which will be culminated into what you call the CGST, which is the central GST, right? But customs will not come into this. Service tax comes, central excise comes, SAD comes, but the basic custom duty will not be brought within the fold of the central GST. Likewise, at the state GST, you will have laws. You have taxes like lottery tax, entertainment tax, luxury tax, VAT, etc., which will be made to be a part of the state GST. But the story does not end here. You also have something called the IGST, which is the Integrated Goods and Service Tax. And the Integrated Goods and Service Tax will take care of all your interstate transactions, right? So that is what we have three forms of GST. One is the state GST, one is the central GST, and the third one will be the IGST, which takes care of all the transactions existing at the interstate level in terms of supply of goods and services. Now, when we talk about the taxable event, unlike today where you have the taxable event of rendition of service or of trading or of manufacture, under the GST regime, what we will be having is the supply. So whenever I engage in any rendition of service, that will be called the supply of service, which will be subject to service tax, or in fact which will now be subject to GST. So unlike today where you have the taxable events, which are various taxable events across various spheres of all the taxes, now you will have a single taxable event which will be the supply of goods and services. But the distinction between the goods and services still remains, right? So they have defined the term service as, under the CAB, that anything which is not service will be, anything which is not goods will now be termed as service. So that takes care of your taxable event. Now when you talk about the abolition of multiple taxes, as I said, there are a list of services, there are a list of taxes existing at the central level, which will be made to be a part of the central GST. And again, you have certain taxes today existing at the state level, which are now made to be a part of the state GST. Now very importantly, as I said, as on date, there is no cross-utilization of credit between value-added tax and service tax or vice versa. And also with GST in place, mind you friends, the cross-utilization between CGST and SGST will still not be allowed. You will have three levels of taxes. One will be called the SGST, which is the state GST. You have something called the central GST, and you will have what is IGST, taking care of your interstate supply of goods and services. That will be the IGST. So unlike today, the cross utilization is not allowed. Likewise, the cross utilization between the state GST and the central GST will not be allowed. However, you have the concept of IGST. So if there is any credit of IGST in your books, that will be allowed to be set off against the output IGST. Thereafter, you can set off the balance of your input CGST with your IGST, and then the balance SGST with your IGST. But at no given point in time, the cross utilization between SGST and CGST or vice versa will be allowed. Am I clear? Yes or no? Yes or no?
Yes.
Right? Now what happens is that, say for instance, I am in Calcutta and I am rendering the service of a legal opinion to my client in Bombay. So we are in two separate states, West Bengal and Maharashtra. So this particular transaction will be governed by the module of IGST. Now IGST, the rate will be the culmination of CGST and SGST. So assuming the rate of CGST is 10% and that of SGST is also 10%. So the rate of IGST will be 20%. So say for instance, I raise a bill of 10,000 on my client in Bombay. So on the bill of 10,000, I will be charging an IGST of 20%, which comes to जो भी है. Say for instance, it's coming to 2,000 or 200, whatever it is. Now, in my books, I have a SENVAT credit in my books of IGST. Someone else who gave me a, say for example, interstate service, and I have in my books an IGST credit of say 100 rupees. I have a CGST credit of say 20 rupees, and I have a SGST credit of 10 rupees. So I have 3 credits lying in my books: IGST of 100, CGST of 20, and SGST of 10. What is my output IGST? Let's make it 200 for the sake of simplicity. So now in this order of hierarchy, when I pay my output IGST, I will be paying how much? Out of 200, I will be allowed to take a credit of 100 of IGST. I'll be allowed to take a credit of CGST of 20, and I'll be allowed to take a credit of SGST of 10. IGST is basically a central tax in the sense that the collections will be made to go to the central government, and then they will appropriate it to the state government as per some sharing mechanism, right? Now when I set off my IGST credit with my output of IGST, it's basically a central tax against a central tax, so that's all right. When I set off my CGST of 20 rupees against my IGST, again there is a setting off between 2 taxes, which is the share of the central government. But the minute I basically set off rupees 10 of the SGST with an IGST of rupees 100, that means what? I'm using a state level tax, or not really a state level tax, the SGST, which is actually the share of the state government, against my output of IGST, which is the share of the. So what happens is basically then out of that sharing mechanism, the central government will now transfer 10 rupees back to the, the central government will now be paid 10 rupees through an internal mechanism by the state whose credit has been utilized to pay the IGST output. Am I clear? That is an internal mechanism of sharing between the center and the state. Likewise, when I'm using the IGST credit against the SGST, then in that case the central government will transfer that amount of money back to the state government. But the cross utilization between the CGST and SGST will not be allowed. Am I clear on this?
What do you mean by cross utilization?
Cross utilization, say for instance that I am a service provider and on my bill of say rupees 100 I have charged when I am giving an opinion to someone within the same state. There the concept of IGST will not come in. There I will be charging both SGST and CGST on the transaction of supply, right? On the same transaction, earlier where I used to charge a service tax, now for all the intra-state transaction, whether it be supply of goods or supply of services, I will be charging both SGST and CGST. That means on say example a bill of rupees 1000 where the rate is 10% each, I will be charging 10% CGST and I will be charging 10% SGST. Am I clear? So now what is my output tax? Output tax is 10% of CGST works out to be 100 rupees and likewise 100 rupees of SGST. Now assuming that you have rendered me some services to the tune of rupees 500 and you are again a taxable service provider within Calcutta. On your bill of rupees 500, you charged me SGST of 10% and CGST of 10%, right? So now after paying you the taxes, so basically what I see, what is my input now? 10% of 500 which is, and 10% of 500 of CGST which is 50. So now I will not be allowed to, and assuming in my case, in what was my output? 100 each. I will be allowed to set off 50 of CGST against 100 of CGST. I will be allowed to set off 50 of SGST against my output of 100 of SGST. But at no given point in time will I be allowed to set off the 50 of SGST against the 100 of CGST. Am I clear? That is what I mean by cross utilization between the CGST and the SGST. And unlike before, right now the states do not have any power to tax services, and the center does not have any power to tax trading activity. But with the implementation of GST and the amendment in the CAB, what will we see? That on services now the states are also collecting the tax in the form of 10% SGST. And likewise, in my example, I am a taxable service provider. If I am a trader in Calcutta and I am selling you certain goods, so that 1000 becomes my trading value, and on that I will charge 10% SGST and 10% CGST. You see, this 10% CGST was not implemented before because the states had no power to tax on trading of goods. Now even the states have the power to tax, the center did not have any power to tax trading of goods. Now even the center will have the power to tax the said activity, and that is how the constitutional amendment bill will now allow the states to tax services and the center to tax the trading activity. But the cross utilization between the CGST and the SGST and vice versa will not be allowed. Definitely against IGST, you are most welcome to set off your credit.
But
now when you talk about...
Let me recalculate. So if the IGST is there, that can be set off against CGST and SGST both. But if it is SGST, it cannot be set off with IGST,
CGST
and vice versa.
What I am trying to say is that the cross utilization between the center and the states, which is not allowed as on date, will also not be allowed post the implementation of GST. And obviously, once you set off your IGST against SGST or your SGST against IGST, which is very much permitted, there will be an internal sharing mechanism between the center and the states to set off their revenue and gains and losses. Am I clear on that? Now, threshold, yes, we have various thresholds. We are not too sure as to what the thresholds would be. As far as GST is concerned, you will have a separate threshold for goods and a separate threshold for services, which I think should be there. But what would be the exact threshold is not known. Likewise, you will have a composition scheme wherein dealers below a certain threshold limit will be allowed to charge a certain level of tax as GST and not get into the main GST stream. This will obviously hamper the setback credit chain, but this will be the mechanism so that even the small dealers can be kept outside the purview of GST. As far as the rates are concerned, yes, the states should be given a band within which they will work. The central GST rate should be common, but we have absolutely no clarity as to what would be the exact rate when you talk about the central GST. In addition to this, mind you, as I said, that what is GST? GST will be on the supply of goods and or services. Now, as on date, you see that the stock transfer, or what you call popularly as the branch transfer, which happens between, say for example, two offices, against the submission of certain forms, there is no levy of any tax on that, right? Now, with the advent of GST, all the forms like C forms and the F forms will be vanished. So now what happens is we are contemplating that now on stock transfers, because it's very much a supply which is the taxable event and not the sale. Why is stock transfer not taxed to CST today? Because it's not a sale. Am I clear? But now the taxable event under GST, is it sale? What is it? Supply. And what is supply? Supply has not been defined anywhere. They've said that they've defined the term services as anything which is not goods. So in all probability now the stock transfer should be taxed. Now how will the credit be available, etc., etc. This is something that is still pending clarity. Now in addition to this, as we heard that GST is basically a destination based tax, a consumption based tax. So most of the revenue will be accruing to the consuming states. So a lot of producing states are worried that our revenue will now be lost, especially states like say for example Maharashtra and all that are high on producing and low on consumption. So then what the government has done in order to make up for this, now they have introduced, or they have basically proposed to introduce under the GST regime a 1% tax on supply of goods, interstate supply of goods, which will basically just be on the initial 2 years, and that should or will not be SENVATable, and this will just be on the interstate supply of goods and not for services. So this again will have a cascading effect, and this they feel will increase the revenue burden on the business houses, because now when they indulge in any interstate supply of goods in order to make up for the low rate of GST or the other modalities, they say that this particular collection will be going to the producing states. Other than this, most of the items have been kept within the purview of GST, barring alcohol for human consumption, which will continue to be levied to the state excise, etc. Likewise, they have special modalities for petroleum. Now, petroleum is one such product wherein the state garners a huge chunk of revenue by levying their taxes. And hence, a lot of states were very apprehensive about getting alcohol within petroleum within the purview of GST, which now they say will be bought within GST. However, for the initial 2 years, they have given it a cooling off period wherein the states will continue levying their taxes. So this is basically the fine print. This is how it will work. However, obviously, it is yet to see the light of day. I do not really know. 1st of April seems to be an unachievable target. However, 1st of October seems more likely. It's been passed in the Lok Sabha on the 6th of May. It's yet to see light of day at the Rajya Sabha, then to be ratified by 50% of the state assemblies, then to basically receive the presidential assent, and it's only after that that the states can move forward. And yes, like you have today the Odisha VAT Act or the Bengal VAT Act or the Maharashtra VAT Act or the Kerala VAT Act, mind you, even post the implementation of GST, every state will have its own act and set of rules. So it's not going to be any one common state GST Act, and that makes more sense because see, there are certain states which are very sensitive to certain items. Like in Assam, whenever I am deliberating, we receive a gamcha as a matter of token of respect and honor. So there you may consider that as a good of special importance. Likewise in Bengal, you have rice. So that means to say that each state will have their own act. However, when you talk about the basic law, the definitions, etc., that will remain common across spectrum for all the state GST acts. So yes, this is what as far as GST is concerned. Yes, please.
Will the threshold exemption for SGST and CGST would be different?
See, I think the threshold exemption for the goods and services should be different, and the states should be different again. But we have really no clarity. We are hearing different news. Like as on date for central excise, there is 1.5 CR. In VAT, it is just 5 lakhs. Again, in VAT, you see that the rates are differing across the different states. But what we at least want is, when you talk about the SGST limit, across the states, the limit should be common.
Exactly, but it would be more complex.
Yes. See, anyways, we have a very complicated law because that is not in the hands of the government for the simple reason that we have a federal structure where every state has its own power to levy, administer and collect taxes. And especially once you belong to a state like Bengal, you very well know what federalism is all about. So, yes, and at the very outset, as I said, our finance minister made it very clear that we'll be having a good GST and not an ideal GST. If we wait for an ideal GST to happen in a country like ours, I'm sure we'll all have white hair by the time GST is introduced.
And will the GST rate and the SGST rate be same?
No, the rate should be different. See, as far as the threshold, the rates are concerned, there is absolutely no clarity till and unless we get, but yes, we have a basic model on which GST would be working, and this is how it would be working. So now, I hope now we are a little more clear on GST. Yes, sir.
Any idea on what will be happening to the credit balances standing for?
See, that's a good question. Credit balances is one. Also, you see that there is a lot of tax holidays that are existing today. Say, for example, for central excise in the northeastern region, you have certain tax holiday which is given. Or what happens to that? So we are very hopeful that the government will bring forward some mechanism for the setting off of this. They will not just let it go in vain. But what exactly and how exactly will they work it out is a very big question. But to just let it be, कि भाई आपका ये balance सब खत्म हो गया, that should not be the case. That will really not be the case.
If they include it in the CGST,
right,
and the adjustment of those CGST is not allowed against, say, SGST. So that will go waste, right?
Yes, which should not be the scenario, honestly speaking. But they'll really have to work out a modality on the basis of which they can allow the setting off of this credit. And as I said, because there will be the SENVAT credit chain that gets disturbed. Once you say that fine, we will allow you not to pay service tax, the GST for the first 2 years because you have an X balance in your books. So you do not charge CGST or SGST to your client, say for instance me. But then I am a service provider who is charging both CGST and IGST. So in that case, what happens, the SENVAT mechanism gets broken. Like even today, you see that there are certain services when provided by an entity, they are not taxable. But when provided to the entity, they become taxable. Say for example, charitable organizations. Certain services when provided by charitable organizations under the mega exemption notification are exempt. But when I provide the services to such charitable organization and I'm a regular service provider, then there is no mechanism by way of which I will not charge, right? So what happens is that accrues just as an expenditure in their books because they are in no position to take the credit. So obviously such scenarios are existing in the current tax regime as well. So they will need to bring out some way out wherein they will allow, because for some people this amount may be a very big sum of money. When you talk about these tax holidays existing at the state level, or for instance even the credits which are existing in their books. In fact, there was a very recent circular in Central Excise where they've said that the balance of education cess as on or after 1st of March 2015 can be allowed to be set off against your output Central Excise. So the very big question now is what happens to my balance existing prior to that. So they should not come out with any absurd notification, but what I wanted to say is that yes, now it is a time for a very massive change as far as the tax structure is concerned. So it's only in the best of our interest that we start reading a little more on this. And there is in fact a dedicated finance ministry site also on GST, or there is a link that will take you to all the latest press releases and will keep you updated about the subject. Now, when I talk about service tax, yes, as I mentioned initially that there was a tectonic shift as far as service tax was also concerned. The minute in 1994, the act which was the Finance Act, we still do not have a dedicated act for service tax. 1st of July 2012, we witnessed a huge change as far as the service tax regime is concerned. Why and how? Unlike before where you had some 120 odd taxable services. Say for example, for a chartered accountant, the taxable service was different. For a cost accountant, the service head was different. For a commission agent, the service head was different. So you had some 120 taxable services. But come 1st of July 2012, what we witnessed was that all these services were got under a negative regime of services, wherein they said that fine, barring these 17 services under section 66D of the Finance Act, we will charge service tax on all the other services. Now what happens is that so today there were a few services which were introduced within the regime of service tax, but honestly if you ask me, in my personal opinion, when you talk about the widening of the tax base, anyways they were covering a lot of activities under the 120 odd taxable services. There wasn't much which was actually now covered and which was not covered prior to the period 1st of July 2012. Certain services, say for example the services of an actuarian or other few services did definitely come within the fold of service tax, but otherwise I think that they were garnering anyways enough revenue from the 120 taxable services. The entire idea was, yes, again a shift towards the GST regime. So, and also the classification disputes. But even with the negative list in place, the classification disputes don't seem to end. The other good part about the introduction of the new regime of services was that for the first time ever, they actually took an effort to define the term service. You see, prior to this, under the erstwhile section 65 subsection 105, under the erstwhile section 65(105), the definition of a taxable service provided by a chartered accountant existed under a separate clause vis-a-vis the services provided by a cost accountant, which existed yet under a different clause, right? So there we see that each and every taxable service had a different definition existing under section 65(105). Now what happened with the advent of the negative list, for the first time ever under section 65D clause 44, they defined the term service. And any idea how did they define the term service? Any activity? Well, we are all indulging in an activity. You are indulging in the activity of listening to me. I am indulging in the activity of speaking or deliberating on service. So yes, this it has to be an activity. There has to be a consideration for the activity. Yes. What else? From one person to the other, yes.
Which should not be covered under any negative list.
Under negative list, barring negative list, yes.
Declared service.
Very good. And declared services, yes.
Yes, mega.
Mega exemption, no, that's very much a service but exempted for the time being. You cannot say that that is not a service. That's a service which is exposed to an exemption by virtue of which you need not charge and collect service tax as of now. But any idea why we have a separate list of activities under the mega exemption list and we have a separate set of activities under the negative list?
Like the negative list of services are basically those on which service tax won't be chargeable. Like the trading of goods is covered under negative because it's something which the central is not allowed to charge a tax on.
Okay.
And mega exemption list is something which are services, but they are those
exempted under the current regime. See, another idea was that negative list is a part of the Act, whereas a mega exemption notification is dependent upon the whims and fancies of the CBEC, and as of now it is exempted, on which service tax is not applicable. Whereas when you want to amend the negative list of services, it needs to be done by an approval of the Parliament, unlike in the case of mega exemption notification, where you see the list can be added or deleted, basically modified at the whims of the CBEC, which is not the case in case of a negative list. So you see, activity for a consideration by one person to the other, it should not be a part of the negative list, includes all the activity of the declared list of services. Now you also have a list of services under section 66C, which is the declared list of services. Any idea why a separate list under declared list? Why a separate list of activities under the declared list of services? Well, yes. When you talk about the entries under the declared list, any 2 or 3 activities which are given under the declared list of services? Renting of immovable property, 1, yes. What more?
Postal services.
Sorry?
Postal services by schools.
Works contract, yes. Construction services. Now see, all these services, if you go in the legislative history of all these services, basically there has always been some raging dispute on these services. As I said, under the constitution, under the 7th schedule, there are 3 lists which are given. List 1 that takes care of all the taxes at the central level. List 2 where the sole power of administration, levy and collection lies with the state government. And then we have a concurrent list under the list 2. Now when you talk about renting of immovable property, which is now very much a part of the taxable service, we've had decisions of various high courts and the apex court wherein they have held that yes, service tax will apply on this. But renting, when you talk about the service tax on renting of immovable property, it is basically a tax on land and building. And if you see under list 2, the tax on land and building is the sole prerogative of the state government. So what happens is that something which is already being taxed by the state is not allowed by the constitution to be taxed by the center. And that's the entire reason why that they had a big spate of litigation, and finally it was a settled position of law that service tax will apply on the renting of immovable property. Likewise, you had some other services wherein they had disputes. So they said, "Bhai, aapko acha lage ki na lage, whether you like it or not, I am going to collect service tax on these activities from you." And that is the reason why it was made to be a part of the declared list of services. Negative list, as I said, is a list of services on which they say that service tax will not be imposed. Well, I really fail to understand that how can you exempt something which you do not have a power to tax. So when you talk about trading, like how someone mentioned from the audience, so trading is against precisely given under entry 52 or 54 of the list 2, which is the sole prerogative of the state government. So something that you do not have the power to tax, you do not have a power to exempt. However, to make the position of law very clear, they said fine, at least on trading of goods we will not collect service tax, and that finds mention in the negative list of services. And at least, yes.
In terms of return filing.
Sorry?
In terms of return filing, I'm asking.
No, let's not deviate from the current topic. I think
because this is related to exempted.
Let us first take this. Any procedural thing, I still have time, don't worry, and I'll sit through our next speakers also here. So not anything which is not on the current topic. Before I leave, I will definitely answer your question. Anything relating to what I'm speaking right now, as we've been doing in the last 1 hour or so, we'll take all the questions. The point is, again, then you have the declared list of services. Likewise, you have the negative list of services. And then you had the mega exemption notification wherein they say that fine, as of now we do not need any service tax on that. Now say for instance, whenever you provide any service to a foreign diplomatic mission, that's a part of the mega exemption notification, wherein you need not charge service tax. But any services provided by a foreign diplomatic mission is given in the negative list of services. And at least you can be sure on death you need not pay service tax, and then they have given that as a part of the negative list. So this is the entire structure as to how they made the negative list, the declared list of services, as well as the mega exemption notification. When you talk about the definition, yes, it has to be an activity for a consideration by one person to another. When you talk about a consideration in terms of even the Indian Contract Act, it's a concept of quid pro quo. That is something in return, and a consideration needs to be paid at the will and wish of the party to the other party. So you see, when you talk about an activity, right now I'm deliberating on service tax standing in this auditorium. So is this something which is leviable to service tax? Yes or no? Why no? There is no remuneration, that means there is no consideration. So this will not be leviable to service tax. But on the contrary, if say for instance I'm getting some money paid for it, then maybe yes, there is an activity for a consideration by one person to the other. It's not in the negative list. It will be subject to service tax. Now see, what do you mean by the term consideration? Now, in fact, this example I'm borrowing from the education guide which was released when the new regime of service tax was introduced. A lot of times you find these artists etc. on the roads that make sketches out of chalk, colored chalk, right? And a lot of times, merely out of compassion, you give them a penny or two. So there is an activity wherein he is drawing, etc., etc. And there is a consideration in terms of the money. But here consideration is not the consideration that is defined under the Indian Contract Act. Mind you, the term consideration has not been defined under the Finance Act. So it has to be quid pro quo. Tomorrow if you choose not to pay, he will not draw is not the scenario. On the other hand, if tomorrow you are so impressed by his work that you have a charity function and you call him over and you say that I will give you 10,000 rupees and you'll have to make, say for example, 10 sketches in a span of 1 hour for my guests, then there is an activity and then there is a consideration. That means what? There is a sense of quid pro quo, and that is the consideration that is being mentioned in the definition of service. Now you see the services rendered by an employee to an employer. It is not given in the negative list, but it is still not subject to service tax. You know, when the service tax regime was introduced, the new one in 2012, we got a lot of calls from our clients ki it's not given in the negative list of services. There are 17 activities. So now as an employee, shall I charge service tax to my employer on the salary that they give me? So what do you think is the answer for this?
Any services by the employee to the employer won't be considered as an activity.
Why? Because again, in the explanation to the definition of service, they have excluded certain activities, one of which is the services or the activity rendered by an employee to the employer, right? So likewise, when you talk about the director's remuneration, if the remuneration is in the form of salary, there is no implication of service tax. But yes, if it is in the form of remuneration, not in the form of salary or any other professional fees that you pay to the director, as a company, the concept of reverse charge will apply and the company will need to pay service tax on the amount of remuneration, not in the form of salary, to such directors.
Full-time directors, if you pay...
See, there is the concept is whole-time directors receiving salary, not subject to service tax. Whole-time directors receiving something which is not salary, maybe in the form of a professional fees or I don't know, any other terminology you may use in income tax, sitting fees, etc. Then in that case, service tax will apply. Definitely, on the basis of reverse charge. Now, a few quick amendments that I would like to touch upon when you talk about the changes in service tax which have been made applicable with effect from 1st of April 2015. Now, okay. Now, we had the negative list in place wherein you had a certain set of 17 activities on which service tax was not chargeable. There has been some pruning in the negative list wherein certain exemptions have been withdrawn, which are effective from the 1st of April 2015. Now earlier they said that any services that you provide to the government were available on specified services with effect from the 1st of April 2015. They have said that any services in the form of construction, erection, etc., even for ports and airports, will now be taxable, which was earlier not taxable. Earlier, if you engaged in any such construction of ports or airports, would fall in the negative list. They have pruned the negative list, and to this extent, service tax will definitely apply on the commission activity of construction, erection, commissioning or installation of original works to an airport or a port. Again, you had certain exemption which were given to performing artists in folk and classical form. It is now said that this will be limited only in cases where the amount charged by such an artist is within rupees 1 lakh. Earlier there was no threshold of rupees 1 lakh, and again they say if it is a brand ambassador, then in this case this exemption will not apply.
So construction services.
Yes, sir.
That will be charged with effect from 1/4/2015.
1/4/2015. These are the services which have been made effective with effect from 1/4/2000. See, when the finance bill was introduced, there were certain changes which were made effective instantly. There were certain changes which were made effective from 1st of April. There were certain changes which they say will be made effective once the finance bill receives the presidential assent. And then there will be certain changes which will be made effective from a date to be notified after the bill receives the assent and becomes an act. So there are 4 sets of changes.
What are the changes can you tell us?
Sir, you will have to refer to the TRU letter. There they have very explicitly mentioned what are the changes, what are the changes effective with effect from 1st of March, with effect from 1st of April, with effect from when the finance bill becomes an act, and from a date to be notified once the bill becomes an act. Like when you talk about the rate of service tax, come 1st of April and we received calls ki now shall we charge service tax at the rate of 14%. Now is it that the cess has gone? Because you see, under the central excise, they culminated all the rates of central excise along with cess into a common rate, right? And that was made effective from the next working day of the budget, which is 1st of March 2015, because there is a specific act called the Provisional Collection Act under which the central excise falls, under which service tax does not fall. So because of which they said that service tax will be made to 14% from a date to be notified after the bill receives the assent of the president and becomes an act. So it's not even if by the June, sorry.
What is the date of 14% will be effective?
That I'll have to ask Arun Jaitley. As of now, he's not clear himself.
Not at cost.
No, not at all. Please, not at all. In fact, the government had to introduce a circular on the 10th of last month saying that the rates have not been increased to 14%. Because, and this is the primary fact, when a budget is passed and they say that with immediate effect the rates will be increased, that is for central excise, which falls under the Provision Collection Act. But service tax does not fall under that. So then again I am repeating myself that the rates will be increased not even when the bill becomes the act. It will increase from a date to be notified after the bill receives the assent of the president and becomes an act. Also currently, what is the rate of service tax? 12.36. They say that with the advent of this new 14%, the rate will become 14% in toto. That means there will be no concept of, yes. And also the government wants to introduce a Swachh Bharat cess of 2%. Now this 2% is on what? Any idea? 2% as on date, your education cess is 2% on the value of taxable service or on the service tax rate, right? According to which your rate works out to be, right? So hence the Swachh Bharat cess will be 2% on 14% or 2% on the value of service. Yes. So that means the rate of service tax should be around, but Swachh Bharat cess will not be from a date instantly, as they say when the service tax rates will be increased. That should be somewhere around October. And the second thing is that they have just opined that yes, because this Swachhata mission is so dear to the heart of our Prime Minister, that they have to collect the cess, but this will not be on all services. They say it may be on a few services or it may be on all services. That is yet to be deciphered. But the rates of service tax are currently the same as it stood. Now obviously the question will arise that once the rate become 14%, that is culminating all the cesses within its fold, what will happen to the balance of the education cess and the secondary higher education cess that you have in your kitty? Then again, to that extent, the SENVAT credit rules will need to be modified, because as on date, you can set off your she against she and your education cess against education cess. So likewise, after that, they must issue a circular or notification wherein whatever balance of your SENVAT credit is there in terms of secondary and higher education cess or education cess will be allowed to be set off against your service tax at the rate of 14%. Now let me just discuss a few other changes. 1 minute, let me see what is important. Again, with effect from 1/4, they have said that the services provided by a mutual fund agency to a mutual fund company or an asset management company will come within the fold of service tax. This will be on the reverse charge mechanism, wherein the AMC will be allowed to, required to pay the service tax on the said services. Likewise, the services provided by the lottery agent will now come within the fold of service tax. As of now, you see that the services to any access to an amusement facility or an entertainment park is exempt. Now they are again putting in some restrictions wherein now it will be taxable again, whether it will stand the test of time or not, because this again has been very specifically given under the list 2 to the 7th schedule, which is a state subject. So once it is taxable, it can be very much challenged in the higher courts that this is a state subject and this should not be actually taxed by the central government. Importantly, the other ones, there are a few other exemptions which have been introduced in terms of Varishtra Pension Bima Yojana, etc., which I'm not getting into right now. Most importantly, under the SENVAT credit rules, you see there is a time limit within which you have to avail the credits in your books, right? There is a concept of availing credit, there is a concept of utilizing credit. Earlier to this, when this change was introduced in the last budget, there was no such limit. Then they tried to confine the limit to a certain period beyond which you cannot really avail the credit in your books. That is, you cannot take the credit from the certain date or a certain time from the date of the duty paying document. Any idea what this time limit was? 6 months. And now they have revised it to 1 year. So this is a welcome change. In my knowledge, there should not be any limit at all, because this is the right of the assessee. However, now from 6 months, they've made it to 1 year from the date of the duty paying document. Again, I will discuss this with an example, but before that, again, there has been a change in the reverse charge mechanism. Reverse charge mechanism, when you talk about section 68 subsection 2, wherein the service receiver is liable to pay service tax on behalf of the service provider. Now in this case, you have certain services like the supply of manpower and security services, which subject to a few conditions were subject to the reverse charge, under which a certain percentage was required to be paid by the provider and the balance was expected to be paid by the receiver. Now they have amended the law wherein for these services 100% of the service tax, subject to the conditions of who the provider is and who the receiver is, will now be required to be paid by the service receiver and not the service provider. Again, in case of certain other services which are now bought within the service tax net, that is services by a lottery agent or services by a mutual fund distributor, will also be made to be a part of the reverse charge mechanism, wherein the receiver will be required to pay service tax on behalf of the service provider. There has been some rationalization of abatements. Like for the GTA services, the abatement was 25%. Likewise, for the services of transport by rail was a different abatement. For the services of transport by the vessel was another abatement. Now they have made it across board 30%, subject to the condition that the SENVAT credit as of the input services or capital goods is not utilized. Now again,
It will be effective from
1st of April. Now again, just a few more other services, or let me just see if there is some important change that I'd like to mention. Okay, now one example that I really wanted to discuss with you, though this has got nothing to do with the 1st of April, is the way of calculation of interest. Now you see, with effect from the 1st of October 2014, the rate of interest for delayed payment of service tax has been changed. Any idea what the existing rates are?
18%.
Sorry, 18% for?
6 months.
Okay. Thereafter?
Up to 6 months, 18, then
From 6 months up to 1 year is?
24.
24. And after 1 year is? 30. Now before I end, because we are almost nearing time, and luckily we started on time and we had a good deliberation of 1 hour and 20 minutes. But before I end, just a quick case study if you all are interested to do. Say for example, this is on the calculation of interest. Now let me just take out that example that I've written down. Now when you talk about the interest, say for example there is a taxable value of rupees, service tax amount is of rupees 1 lakh, right? Now the due date for the same was sometime in the month of August 2014, or that is the month in which the service was rendered. So the due date becomes the 6th of next month, which is 6th of September 2014. Now say for example I make the sum of payment precisely on the 25th of September 2015. So how will you calculate the interest on this? And 1 lakh is the service tax amount.
Up to 1st October, 18%.
Sorry?
Up to 1st October, 18%.
No, you tell me date wise. Amount of service tax is 1 lakh. The due date for the same was 6th of September 2014 because the services were rendered in the month of August 2014. And I precisely pay this money on the 25th of September 2015. So how will you calculate the interest?
1 year, 90 days.
Sorry?
1 year, 90 days.
Whatever be the delay. The delay is basically from the 6th of September 14 to the 25th of September 2015. So how will you calculate? And let me give you the rate chart. The interest from 1st of October, as someone correctly mentioned, was first 6 months is 18%, beyond 6 months to 1 year is 24%, and beyond 1 year is 30%. There is a concession for small service providers whose turnover or taxable value is within 60 lakh, assuming he does not fall under that particular scenario, and the rates will be 18, 24 and 30, right? With effect from 1st of April 2011, the rates were basically 18%, and thereafter the first shift of interest rates were done precisely with effect from 1st of October 2014. So how will you calculate the interest? Let's take it. The first due date is what? 7th of September 2014.
Up to 30 September.
Up to 30th September, the rate was what? 18% per annum. So that will be 1 lakh into 18% into the number of delays divided by 365. I think the number of delays should be somewhere close to 24. I just worked it out in the car. So I think it should be 24 days. So it should be 1 lakh into 18% into the total number of delay divided by 365. The delay will be from the 7th of September 2014 till the 30th of September 2014. Why 30th September? Because with effect from 1st of October your rates are changing. Now come to the next one. 1st October 2014, the rates got changed
18%.
till
18%.
18%.
This is 18%.
Yes.
31st.
Okay. Now here I have a different set of calculation. Any other idea? नहीं, that's all right. I think कर दिए ना, because you need to do the introduction bit.
Then 7th of March should be 6 months.
See, in my knowledge, 1st of October the rates got changed. So 1st of October 2014 will be the starting of the next rate till the 6th of March 2015 will be at the rate of 18% into the number of delays, that is, say for example, I think it should work out around 156 or 157 days divided by 365. Now can anyone tell me why have we taken the date to be 6th of March?
For the first 6 months.
Sorry?
September is
Yes. Why? Because what did we discuss? For the first 6 months, the rates will be 18%. So 6 months from your due date which was 7th of September. So 7th of September, so 6 months becomes September, October, November, December, Jan, Feb, that becomes 6th of March. So till then again it will be at the rate of 18%. Now the next will be 7th March 2015 till 1 year from the due date. What was the due date?
7th September 2014.
So from the 7th of March 2015 till the 6th of September 2015, 1 lakh into 24% into number of delays, which will be somewhere around 183, 184 days, divided by 365, and then from the 7th of September 2015 till the date I make the payment, which is the 25th of September, it comes to 30% into 1 lakh into number of delays. Now why interest calculation is so important, let me tell you. We had a couple of applications that we made under the VCES scheme. And you know, for a small non-payment of 2 rupees of interest, the application was not rejected, but yes, it was kept on hold, wherein we had to pay that sum of money, clarify to the commissioner as to why the why the calculation of interest varied, and thereafter the VCS 3 was given to us. And so if they had some protocol that if the interest is varying in between 1 rupee to 200 or 300 rupees, they will allow the application, because this is an interest, this is a compensation that the government is getting for the delayed payment. But for even 2 rupee of short payment of service tax, there have been instances where they have actually point blank rejected the application. So that is why it's very important that your rates of interest are in place. It does not mean that yes, it is 30% for greater than 1 year. I simply take the rate of 30%, apply it and pay the sum of money to the government as interest. No, that is not the scenario. Likewise, when I discussed the changes in the SENVAT credit, I said that now the time limit for SENVAT is what? What is the time limit?
1 year.
Yes, so it's 1 year from the duty paying document. So say for example that you have some duty paying document in March 2014 and April 2014 which you could not use for some reason. And now the time limit has been increased to 1 year with effect from 1/3/2015. Yes? So will I now be able to take the credit? I repeat my question. The duty paying document is dated March 14 and April 14, right? And we are standing currently, now say for example, we are standing in 2015 right now. Now this limit has been basically increased to 1 year with effect from 1st of March 2015. So will I be allowed to take the benefit?
Yes, no. Yes, it is allowed.
Yes or no? If yes, why? If no, why?
Yes, because it is accruing now. That is why it will be allowed.
Accruing now as in the duty paying document is dated sometime in the month of March last year.
No problem. No problem. But it is after what, 2015?
1/3.
Yeah.
This change is effective from 1/3. The SENVAT credit change, not from 1/4. See, basically it will be allowed for the simple reason that this is a procedural amendment, and it has been mentioned in various case laws etc. that procedural amendments are always retrospective in nature. So if you are standing today, you count 1 year back. So accordingly they say that yes, since this is now this is obviously subject to litigation and prone to litigation, but whenever you say, when you talk about the procedural change, which is always retrospective in application, and hence on this they can say that if you take the SENVAT credit on 1/3/2015, because it is from this date that it became 1 year, and accordingly if there is any duty paying document dated 1/3/2014 and onwards, you will be allowed to take the credit. But if it is dated, say for example in the month of February 2014, then it will not be allowed. Am I clear?
Yes.
Is there
So
any
that
time-
is,
Ma'am,
yes.
is there any time limit for utilization of the SENVAT credit?
No. There is no time limit, but generally they say that it is following a FIFO method. That is, you first utilize the opening balance, then what is accruing to you in the current year. So there is per se no time limit for utilization of credit, but you should follow a FIFO mechanism, that is first in, first out. Say for instance, you took the credit, you have not availed the credit of 2014, but you've started availing and utilizing the credit for 2015. So that is not an ideal scenario. You should really first utilize the credits that are already standing in your books and thereafter, but there is no time limit per se. I think
Is there any change in works contract as well?
works contract, well, with effect from this, no, but they have in the last budget done away with the slab. See, under the works contract, you have a set of rules called the service tax determination of value rules, wherein under rule 2A they define or they describe as to on what portion and on what value should service tax be charged in case of works contract. So initially you had three such categories, 40%, 60% and 70%. Now they have just made it two categories, that is 40 and 70. That is under rule 2A of the service tax determination of value rules, which was done in this budget se pehle wala. Right. So I think with this I'd like to bring an end to my session, and I'd like to thank you for the Vice Chairman for giving me an opportunity. Under their aegis, this is my first deliberation. Thank you very much, Anirbanda, and thank you all so much for such a patient listening. Thank you.